Welcome to this episode 120 of Your Next Trade Code. Today, this options boom is out of control. So, if you've been on social media, it is pretty clear that you should be quitting your job, that you should be trading the market, that really this market is so easy that selling put options is just a winner, that clearly we are back to the Madoff, and I know what I'm talking about. Stories where really making money trading is easy. So let's start with the chart that has been shared with Goldman Sachs, looking at the volumes of calls on the US market. We are talking about the last 20 sessions out of Thursday. 40 million contracts have been trading of calls. And as you can see, since 2020, that has been a massive ramp up. So that comes with actually COVID, but as well the free options traded in the US market from most of the brokers. And in the meantime, we've seen tons of educators pretending that trading option is so easy that you're going to be making money. So no need to have any education. Quit your job. I'm just joking. But literally, as we're going to see during this session, the market is really pushing the boundaries into this so easy. And the market feels pretty much like a casino these days. So let's start, as always, with the week-to-date asset performance. Looking at the S&P 500, like any single week, you're going to be up 1%, 1.1%. And if you remember last week, we said that the straddle, meaning the move from the calls and the puts for the S&P, was pricing a move of 1.1 to 1.2%. So this is exactly the move that was priced. We have 1.1% for the S&P, 1.3% for the Nasdaq, a bit more for the Russell. But overall, equities have been doing pretty well. US dollar kind of flattish. The big winner for the week has been Bitcoin, Ethereum, crypto. And over the weekend, we had a new all-time high for Bitcoin, $125,000. It's still trading against the dollar, but that tells you really how this market is trading very, very strong. We had a bit of a coming back from the WTI into the low 60s, gold making new highs after new highs, and copper as well, very, very strong. So really the hard assets, we are talking those commodities have been very, very strong. What about the week-to-date industry performance? So if you do have like the Russell here, you do have like the S&P, so pretty spread between the winners and the losers. But on the right-hand side, interestingly, we see one of the recent losers year to date, which was healthcare and biotech. So healthcare, very, very strong XLV. We're going to be looking at it through the technical analysis. That was a pretty obvious trade. But really the deal that was signed between Pfizer and the Trump administration really ignited the rest of the sector. And the sector has been really, really strong. Left-hand side, when you do have like a WTI down, as we saw just previously, that means energy has been struggling. Gold here, nuclear. So really the winners, the semiconductors, very, very strong. So the recent winners are still winning, even if we're going to see later there have been some cracks in the overall market. So what has been the big winner for the week? This is, as I said, healthcare, up almost 7%. So really a strong, strong move. The sector versus the S&P was really underperforming. As you can see, it was down flattish for the year almost, and now picking up a bit of the underperformance. What about the rates? US 10 years at 4 so actually I should be changing that, that's 4.12%. So we are oscillating between 4.05 and 4.15%. We do have like still a bond supply coming. So pretty much the same picture. If you look at the Fed funds expectations, looking at the cut for the next October meeting, we are talking roughly 90% chance of cut in October, and then close to 90% as well chance of a cut in December. So we should be having 2 cuts in the next 3 months. But what we had as well is the US government shutdown since the start of the month of October. We clearly flagged last weekend that most of the time when the market, when the US government is shut, the market equities really don't care. I think going forward, the question will be if it lasts too long. So If it's only the market is pricing roughly, if you look at the betting market, that the government will be shut over 10 days. So we are talking roughly around the end of this week. It goes further than that, then you do have like some problem, because obviously you're going to have a lot of civil servants are going to be fired. You're going to have a lot of uncertainties around the eco numbers. So a shutdown is fine as long as it's not too long. What about the VIX, the volatility? This is something that is interesting as well. So if you look at the S&P over the last 5 sessions, it has been up every single session. And in the meantime, the VIX, the volatility has been up. We are talking the 30 days volatility on the S&P 500. Generally, that tells you that happens, roughly 10% of the time. Look at what we discuss most in details in the 4x4 video series. When the stocks are going up, volatility is going down, and only 10% of the time they are going through the same direction. But that tells you as well that market participants are buying the tails. We are talking a lot of calls that have been bought. We saw that not only the 40 million contracts of calls that were traded over the last 20 sessions every single day, but as well, the split is 65 calls, 35% put. So really trading is easy these days almost. So let's go back and look at now the technical analysis, starting with the S&P futures. And as you can see, we are pretty much overstretched for the S&P. What is interesting is the market is roughly going up 100 to 120 points for the S&P, and then giving back 20 to 30 points like it did on Friday. But really the trend is the same. We are going up 1% every single week. We didn't have any correction of more than 2% intraday since, I think, April. So pretty much same picture. We discussed the Russell that was last week, and the potential triple top of the Russell 1000. So hopefully it's going to be up. Yeah. So as you can see now, we have been breaking higher for the Russell. A bit of coming back at the end of the session, but more or less the trend is still very, very strong, making new highs after new highs. Another one that I want to flag is that we just discussed the not only the German market, but the European markets that have been breaking higher. So here you are looking at the stock 600, which is the equivalent of the S&P 500, not in terms of size, because obviously the companies in the US will be much, much bigger, but we are talking the 600 biggest market cap in Europe. And as you see, over the last 2 sessions, Thursday and Friday, breaking higher for the index. Why? Because obviously in Europe we do have like tons of exposure to healthcare, and healthcare has been very, very strong. And combined with the strengths of banks so far, with as well names like LVMH, luxury, coming back a bit, we are making new highs in Europe. What about looking at the Bitcoin? Actually coming back a bit from early this morning at $125,000. What about you push a bit higher over the weekend? That's much easier than doing it when everyone is in front of his screen. So as you can see, we made new highs. You don't want to see any assets coming back and making those kind of candles. But that tells you about really the risk appetite from this market. XLV, as I said, really important one. That was an easy one. And as always, this is a bit of easy back trading in hindsight. But as you can see, this is the chart that we had. So everything was coming mostly from Pfizer. You see this strong first candle with above average volume. So this is the first one. And then we keep on carry on. So really, the names have been very, very strong in XLV. Another name that I want to flag, and I need to flag, is obviously Palantir. So Palantir, that was on Friday. We had a weak session, and I think this is important because if you combine that with actually Tesla on Thursday and Friday, which give back a lot of performance, and what you try to identify is how strong is the rally. So far, the names that have been pushing higher for this week were really the dodgy names. But the ones, the big leaders, we are talking Palantir, we are talking Tesla as well, actually underperformed quite massively over the last 2 sessions. So there are signs that we might be reaching the end of this bull market. But if you look at Robinhood, everything is fine. 148. Actually, I tried to do some weekly put options, didn't work out very well. So very, very strong all week. Why? Because now they are betting they are going into the betting market. So picture is the same for the equity market, very, very strong. And if you look at the week story, starting with what we like to be looking at is how the different factors, different strategies have been doing over the last few sessions. As you can see here, this is for the non-profitable tech. We are talking up 8.5% over the last 5 sessions. We are talking the meme stocks up 3.5%, the liquid most short 8%. So roughly the story is about massive short squeeze, but most of the dodgy names. And this is why you have on social media people telling you how to move from $100,000 in $1 million just by trading, how to be trading, options and making a ton, how to sell options, blah, 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 over and over. So really we're in that kind of market. But you do have like here the S&P versus the 10 years. And this is pretty much the massive correlation about the two that we flagged last weekend. The government shutdown, really nobody really cares so far. We see at the end of this week, as I just said, job market, unfortunately, we didn't have the NFP numbers because of government shutdown, but we had some other indication from the deterioration of the job market from 2 or 3 data, and clearly the job market is not as strong as it was like 6 or 12 months ago, and that's probably why the Fed is going to be cutting in October and in December. What about the leading indicators? Because everyone is telling you the economy is firing on all cylinders. We flagged last weekend that 80% of the earnings growth was coming from AI and AI only. The rest of the economy is not doing that well, and that's been confirmed with the ISM manufacturing and services, and you can see we are trading pretty much close to the 50 level. So that tells you that the economy is growing around 1.5% GDP growth. But really what is interesting is the around the 50 for services. So services are making 80% of the US economy. And actually they have been coming down recently. If you look at the new orders, this is not great. But in the meantime, there is inflation. So really not such a nice picture versus what the equity market is telling you. And as I said, this was for XLV, this was for Pfizer tariffs deals, which really put all the healthcare stocks in fire. So what about this week? Actually, this is a very light week. We are waiting for the earnings season starting with JP Morgan in 10 days time roughly. We do have like a bit of names like PepsiCo and some beverage as well, but very light for the earnings. In terms of macro as well, you don't have much, especially because of the government shutdown. We could have less numbers than expected. We had yesterday on Saturday the elections in the Japanese market. In the Japanese Nikkei is making new all-time high. Actually, I should have been looking at it in the technical analysis. So new all-time high, new government. Let's see how the market is going to be reacting on Monday. But as you know, really Japan has been leading the market as well. This is one of the leading indicator for this overall market. What about the others? We do have like tons of Fed speakers coming. One of the most important one is on Thursday, Powell. But overall, tons of Fed speakers telling us they're going to cut, we're not going to cut. So we're going to have a lot of noise coming. We do have like bond supply. We get some 3 years, we get some 10 years and some 30 years. So roughly 120 to 130 billion bonds. And finally, I want to flag that as we are getting closer to the earnings season in 10 days, as I said, one is coming from JP Morgan. And as you can see, this is the when the companies are going to be reporting due to the calendar. So mostly 8%, this is for in 10 days time. And as you can see, this is mostly financials. We are talking JP Morgan, most of those names. And then for technology, for the big really drivers, we are talking end of this month. You can see 44% in information technology. Okay, so this is for most of the fabulous 7X NVIDIA. And what should we be expecting in terms of earnings growth? So earnings growth is roughly priced year on year plus 7%, which is, if you look at the average of the S&P 500 over time, this is the growth. We are around 7%. This is coming down from the 11-12% that we had in Q2. So for Q3, a bit less. Most recently, expectations have been on the way up, but not that much. So if you think about coming from 11 to 7%, that gives room again for the market to be beating these expectations. What about the expected move for this week? As always, plus minus 1.2%. We carry on. The same names are going on. But as we flag today, again, what is going higher are really the dodgy names. We are talking that this market is pushed by a call. So we are talking, short-dated strategies with really, I want to flag this one again and again, non-profitable tech with more short, popular retail longs. So retail is making a killing, as I've been saying for months. Retail is in control, but overall, this is not a high quality market and driven again by very few names. So probably if you go on social media, as I said, you don't need any education. If you do in the near future, you could subscribe to the 4x4 video series. You can do the mentoring. This is 12 sessions on Zoom, or you can join the trading community on Discord, where we have a free channel and we have 30 channels beyond the paywall. So any questions, you send me an email at greg@duponttrading.com. And this is it for me for this week. Have a good trading week. Bye-bye.